Hey guys, Tony here. Happy Friday, May 17th. A flurry of filings in pre-market today for GameStop, including preliminary results for Q1 and a new prospectus to issue up to 45 million shares. Let's go through these filings and exactly what it means, why it's happening. We'll do a quick peek at the financial forecast spreadsheet for GameStop. There's going to be a lot of spin on these filings from people who are emotionally invested in the play. I want to give you guys an unemotional, financial, logical-based take on what is going on here. Let's get right into it. The four filings that GameStop dropped this morning are on the left-hand side of your screen. Here at the bottom, we have the S3, which is the shelf registration statement. That just basically says that, hey, we have 1 billion shares authorized and we are going to open some of them up to sell to the public. The next filing we have is the 8K, which is the preliminary earnings release for Q1. And in that filing, which will come underneath that shelf offering, GameStop is saying that they plan to sell up to 45 million shares. GameStop says that they are going to use the money raised from these 45 million shares for general corporate purposes. That is a catch-all that covers many different things, which may include acquisitions and investments. And you're going to hear a lot of spin that they're going to use this money for an acquisition, and maybe they will. Maybe they will, but they do say here in green there are no current plans or arrangements to make any acquisitions or investments. So as you're listening to people spin this, make sure you're actually reading what is in the filings. I would always prefer you guys get your information from the filings instead of what social media pundits are saying. The reason that I think that they had to do the 8K, giving the public a pre-announcement on the earnings, is that typically when you issue a prospectus, you need to provide all your financials and forecasts to the sales agents, the one that's going to be handling the prospectus. That is called the prospectus due diligence. And since that information was disclosed to an entity, GameStop most likely also had to disclose it to the public. The fourth and last filing we have is the 8K, which is the actual sales agreement. So now let's dive into these documents a little bit deeper, especially these preliminary results that I have on the screen for Q1. Talk about the timing, and we'll look at the financial forecast spreadsheet for the rest of this year. If you have been listening to the hype channels on GameStop, some of these results I have on the screen are going to be shockingly disappointing to you. But even if a couple of the numbers on this pre-earnings release today are disappointing, it is important to understand them so that in the broader context, we can understand the other moves that GameStop took today and how this affects this play for the remainder of the year. The biggest number from GameStop this morning is the updated top-line revenue number for Q1. They are saying it is expected to come in between $872 million to $892 million. For some perspective on that, analysts had been forecasting a number slightly over $1 billion for Q1, and this represents almost a 28% decline in top-line revenue from Q1 in 2023, far missing analyst expectations for Q1 revenue. On the good news side, in these preliminary results, GameStop is telling us that the net loss for the quarter is expected to be between negative $27 and negative $37 million, which is an improvement over Q1 a year ago, which was negative $50 million. So that is some good news to take away, even in a quarter with what we expect to be a 28% decline in top-line revenue. It appears that they are going to narrow the net loss for the quarter. GameStop says that they expect to end the quarter with cash equivalents, and marketable securities on the balance sheet between 1.07 and 1.09 billion. We know that they had 1.19 billion of the same cash and cash equivalents on the balance sheet last quarter. That implies about $100 million cash gone off the balance sheet, and that would be in line with what we would expect for Q1 cash burn. The last item on the preliminary results is the SG&A, expected to be in the range of $290 million to $300 million compared to $345 million in the same quarter a year ago. Now, the spin on this number is going to be, look, guys, the SG&A dropped $45 million, but you can't just look at the number. We must look at the SG&A in terms of percentage of top-line revenue. And unfortunately, that is an increase from 28% in 2023 Q1 up to almost 34% in Q1 2024. And this goes back to what I was saying several weeks ago, that at some point, the SG&A cuts that the company is doing are going to have diminishing returns, and that you would see that SG&A in terms of percentage of net revenues increasing. And here we see the results of that today. Another way to phrase that is that GameStop has been doing an excellent job of cutting costs. However, there reaches a point where you can't cut costs as fast as your revenue is falling, and that is why you're seeing this huge percentage increase. The revenue fell much faster than they could cut the cost. I would like to add, though, if they are able to keep SG&A at $300 million a quarter for the entire year, that would give them a total SG&A for the year in 2024 of $1.2 billion. That would be an improvement of over $100 million compared to 2023. So we will have to watch the remaining quarters in this year and see what the variability in that total SG&A is by quarter. But if they can hold this line at $300 million SG&A expense per quarter, that is an improvement on the overall number compared to last year. But I do caution you to make sure that you're not just looking at the raw number, but at the percentage of SG&A as a total of net revenue. Now, in terms of what does this mean for the rest of the year, for Q1, analysts had been expecting about -9 earnings per share. Based on the numbers we got today, I'm forecasting it's going to come in probably around -12 a share, missing the EPS estimate for Q1. For 2024, analysts have expected a drop in top-line revenue from $5.2 billion last year to $4.8 billion in 2024. Now we're seeing worse results for Q1 than we had been expecting. Will that impact this 1 penny per share positive earnings for the entire year of 2024? We need to think about how this poor performance in Q1 translates to the entire performance of the year. What are the other quarters going to look like? And are we going to hit this target of 1 penny positive earnings for the entire year? Or are analysts going to start downgrading their 2024 total estimate for GameStop? I know on the hype channels for GameStop, you're getting a lot of other information telling you that this is going to be a massively profitable company in 2024. I just would caution you to temper your expectations based on results that are coming in. Do not make the mistake of discounting Wall Street professional analysts' estimates for GameStop, because they have been far more accurate than the what I would call misinformation you're getting from retail analysts on YouTube. Let's wrap this up talking about this offering of 45 million shares. If GameStop is able to sell those shares into the current price around $20, that brings them in almost $1 billion. And like we have covered in my video called the CEO Handbook, when companies get a gift handed to them by the market of a massive price run up, not tied to the financials or the fundamentals, and make no mistake, this run up to $60, $70, $80 in GameStop is not tied to any financial performance of the company. This was a gift. When companies get this gift, you should learn to expect them to sell shares into it. That is the smart business move. This puts GameStop in an excellent position on their balance sheet with somewhere up to maybe $1 billion of extra cash to work with going forward. So I have no problem with them doing this, and no one should ever fault companies for raising money when they are handed a gift like this, whether it's GameStop or any other company. Learn to expect this. This is what CFOs are paid to do, to capitalize on situations like this. And go watch that video called the CEO Handbook. You will find it both funny and ironic how a year and a half ago, I predicted this, and we see it in many, many different companies. If they have shares available and the price runs up, expect a dilution offering. Although GameStop has an excellent balance sheet and no long-term debt, they are stuck in a situation where they're dealing with long-term declining top-line revenues, and that is something the CFO is going to be thinking about. And bringing in more cash just gives them a lot more breathing room to sit back and figure out strategically what they're going to do next. This is not a bad thing. Now, if you have been in my Discord, you know that we have been talking about this price run up on GameStop and saying that there is nothing wrong with considering taking advantage of the run up. especially if you bought in at 10, 11, 15, 20 bucks. Nothing wrong with considering taking advantage of this price run up to lock in some profits and take care of yourself. GameStop is down about 27% today on today's news of the dilution offering, currently trading at $20.23. The price is going to come back down to a fundamental price where it was prior to this run up over the last week or two. What happens in the meantime in the next coming days or week? Will there be more volatility? Yeah, sure, there could absolutely be more volatility. The options chain is loaded up and people are still excited about the Roaring Kitty videos, but fundamentally nothing has changed at GameStop, and now we have a Q1 coming in worse than expectations. I think it is very safe to guess that the price of GameStop is going to come back down over the next couple days or weeks or month, however long it takes. It will come back down to the price where it was before all of this madness started a couple weeks ago. My sincere hope is that you guys were smart traders, that you did not listen to the hype channels that told you to buy into this run up and bag hold it all the way back down. I hope you locked in some of those gains and took care of yourself, took care of your portfolio. Please leave me your comments or questions down below. I love to hear from you guys. I'm Tony Denaro, and I will see ya on the next video.